Okay, everybody. Wow, here we are. It is Wednesday, March 4th, 2020. My post-market wrap-up. Did you see that surge of stock buying that occurred pretty much as soon as the 10-year yield broke above 1%? If we learned anything from this market, and we're always going to learn something, it's in this environment the 10-year yield is key. Let's go over this day real quick. I explained to all of you, watch the bond market. Watch the 10-year yield. That was pretty much the theme of my video this morning. So stocks opened up like 600 points to the good, fell relatively quickly, almost cut their losses in half within a short period of time as that 10-year yield was trying to find some type of a stabilization point. Then, if you noticed, because I was watching this like a hawk all day, and I posted this on Twitter and Facebook and LinkedIn, soon as it seemed to stabilize, stocks started to gain ground. And then again, the moment we broke above 1%, I mean, the stock market surged higher. So again, what's our takeaway for us lions out here? The 10-year yield below 1%, you got to be cautious. Above 1%, the market seems to be very comfortable with this. So let's play this accordingly. It cannot be easier. All right, so what does this mean in the grand scheme of things? Is this all green lights moving forward? Absolutely freaking not. Absolutely freaking not. Now let's talk a little bit further about the yield curve today. When you are looking at the entire curve in aggregate, understand what is happening to the extreme short end of the curve. The Federal Reserve pumped $105 billion into the repo market today, the extreme short end of the curve. 120 something billion yesterday. It's not going to stop. This is rigging the short end of that yield curve. So when you're looking at the extreme short end of that yield curve, realize it's absolutely fake. And the Fed is playing a very dangerous balancing act with the entire yield curve. Again, how does the Fed keep rates low? You know what the answer is. It's very simple. They have to add digits to a screen, magically create cash out of thin air. Just boom, it's right there. And they get into the debt market, buy it. This suppresses rates. You're not supposed to know that. Big, big, big secret, so do not share this video. Don't let the president see it or anybody else. That's the truth. But that's how they rig the debt market. There's no price discovery whatsoever with regard to the debt market at all. It's all faked. It's all rigged. The stock market is a derivative of the debt market. And if again, they can keep the debt market from cratering, they can keep the 10-year yield, we learned a lesson today, above 1%, the market's going to get all euphoric. So we know where that pivot point is. Use that as a pivot point for yourself. Now, you got to look for these kinds of things when you trade. Look, this is not an easy business. It's really not. We all have our shares of losses. If we are smart, we will stay on the right side of this. For the most part, nobody, and freaking nobody gets it right 100% of the time. It's impossible. I don't care what trading system you're using. I don't care what else you're factoring into this. You will have losing trades, sometimes multiple in a row. Believe me, it's happened to me in the past, and I am certain it will happen again. That's just the game that we play here. But let's back up a moment here. Let's back up again. We just got an emergency rate cut yesterday. More cuts are coming, people. The Fed is going to cut again at their next meeting. They're going to cut again, and again, it's going to send a no confidence vote to the market, to I mean, come on. You can't make this stuff up. When you have a central bank or a sitting president saying we need lower rates, emergency cuts, it's a no confidence vote in the market. But as you can see, the market is so debt addicted that just one day later it's saying, oh, this is really good. Let's just go with the flow here. And that's what you can expect moving forward, along with public bailouts of the healthcare system, public bailouts of the farmers, other industries, the banks, energy, whatever they got to do to make sure that the CEOs of these corporations can continue to get big, fat, ugly bonuses. Well, it gets sucked out of you. You don't matter. Remember that. In this new world order, you don't matter. It's all about the upper echelon of society, the 1%ers. That's it. They're going to suck you dry. And then once you're sucked dry, they're going to move on to the next one, move on to the next one, move on to the next one, period. You are an instrument. That's all you are, a means to an end. Again, in this new world order run completely by central banks who are fulfilling their destiny to become the lenders and buyers of last resort, which means that you are the borrower. You're forced as an American citizen. You own it. You understand that? Okay? And I would imagine you realize that you're powerless to do anything. We need a revolution. We're not going to get one. The people are going to line up and willingly get sucked dry like there is no tomorrow. So what can we expect here? More of the same. An incredible debt acquisition like I don't think you understand. In order to sustain where we are, in order to push stocks higher, more debt is going to need to be shoved into the system. Where does it come from? It comes from you. It doesn't come from the Federal Reserve. Every single dime that the Federal Reserve prints out of thin air is on your back if you're an American citizen, because the United States of America now is a slave to its central bank. What do we owe? $24 trillion to the central bank. And the system is designed not to ever pay this back. You understand that? See, there are some people who believe that, oh, we can never pay the debt back, so it's got to be forgiven. No. This is the people who don't understand the markets. These are the people who don't understand central banking. It's never meant to be paid back. Let me put a perspective on that for you. The Federal Reserve creates capital out of thin air. It's theirs. It's not yours. Whether they add it to a digital screen or whether they print it out of thin air, the bills in your pocket that you think you have in your bank account, those are not yours. So to make sure that the debt acquisition continues and continues and continues, those bills, those newly created bills, digital form or physical form, whatever, they are owed back to the Federal Reserve plus interest. Where does the interest come? It's created out of thin air. You understand? It's designed to continue to borrow and borrow and borrow and borrow, and you're the one supplying the funds. You understand? And the Fed can do whatever they want with those bills. That anything you can't imagine. They can bail out whoever they want to. They could do things under the table. This is a twisted system, and once you understand how it really works, you probably get very frightened. But I think I've outlined it for you here. So, understanding that this mechanism of extreme debt acquisition is going to continue as rate cuts come. We're going to zero with regard to the federal funds rate. There's no doubt about it. We're going negative according to the president. He is calling for more debt, begging for quantitative easing. Again, and he's getting cheered. Quantitative easing! Yay! Negative rates! Yay! These are the people who are, I'm going to show you something. I'm going to show you what they are. You're going to like this. These people are, ready? You're going to love this. It might offend some people, but, that's just the way it is. How do you like that? That's who they are. You like that one? Yeah. They're retards who again, are lining up to the execution chamber to be sucked dry. And they don't know anything other than, yay! You can't make this stuff up. It's impossible. It really is. All right, look, I think I covered it all today. So the key here, the key to today's video is the pivot point. We know what it is. The pivot point here is 1% on the 10-year yield. Above that, the market seems to love it. It's going to thrive. Below that, the market's going to struggle. Obviously, crude oil plays a role in this too. So I think the mechanism here that we now have a more clear understanding of, what does it do? It makes our life much easier as a trader. I said I wasn't going to do more than one trade today. I was short this market at the open. I pulled out a profit, nothing major. But I did enter long calls towards the end of the day. Another positive trade for me. Let's ride the wave. Let's ride the wave. And at the same time, understand what the much bigger picture is here. The debt cannot stop. It's never meant to stop. It's never meant to be paid back via the mechanism I told you. There will be no debt forgiveness, no jubilee, no reset of the debt, no gold standard. That is all some kind of a fable that I don't know who started this, but it's a joke to give maybe those who just don't get it some type of hope to latch onto. Meanwhile, they're being set up for the slaughter by not understanding what's going on. Anyone that puts out a piece of information like that is not a market person, does not understand central banking, does not understand the bigger picture that has been going on since the creation of central banking and what their end game is. If you follow this blog, you know exactly what that end game is. So again, I would like to welcome you to the New World Order. Love you a lot. Please share the video. I'll see you tomorrow.